Hello, in this presentation we will record rental income in QuickBooks Online. We will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses, and a QuickBooks Pro desktop version course you can find at the link below. Here we are on the QuickBooks Online dashboard. We will be continuing with the Get Great Guitar problem. We're going to be entering rental income, and to take a look at that, we're first going to look at the financial statements on the income statement or profit and loss. So we're going to scroll down here to the reports. Left side, we're going to go to the profit and loss section. And we're going to find, we're going to have the dates to be the dates of 02/01/21, the month of February, 02/28/21. So we're going to be running this report, the year we're working is 2021, month of February, and run that report. So you'll note here that we have different formats of income. Now note that a lot of companies will only have one or two types of incomes because that's all they do. They do what they do, meaning if we sell stuff, that's probably our main part of income. We buy stuff and we sell stuff, and therefore we would have all of our income grouped into the sales of product type of income. On the other hand, a lot of companies do a lot of service only. So if we were a bookkeeper or a lawyer or something like that, then we would just group all of our income into the service type of income. We're going to add another group, and then of course we have a lot more expenses because we pay for everything else that we do typically. So the expenses typically will we'll have more account types of expenses, although we hope that the total of the expenses will be less than the total revenue that we generate. So there's going to be more groups of expenses, more types of expenses, than there will be groups or types of revenue, but typically we hope that the revenue in total will be larger. We're going to add another revenue type here, and that's going to be the fact that we have the service revenue. That's going to be mainly our guitar service and our maintenance kind of stuff that we have in terms of the service here. And we're also going to include rental income now. So we're going to say that we have rental equipment, maybe amps or something like that, our guitars, or we're going to set up something, a stage for someone or something like that, and rent out some of our equipment. So we're going to add another income type of area specific to the renting of our music equipment. A couple ways we could do that. If we want to add a new category here, then we could go to our accounts. We can go to my accounts over here. And go to accounting over here on the left, go to accounting and chart of accounts and add the new account here. And note that that account needs to be an income type of account. So if we scroll back down, remember that this is typically in order by account type, meaning assets, liabilities, equity, income, and expense, and more specifically assets of cash, then accounts receivable, then other current assets, then fixed assets, and then liabilities of accounts payable, and here more liabilities down to equity, and then finally the income. So when we set this up, we want to make sure it's an income type of account that we are going to set up. We're actually going to do this as we bill the client, as we collect the sales receipt. We'll set up a new account, and we'll also do that by setting up a new item. So remember, the inventory items are what are going to be on the sales receipt or invoice. So if we go up to the sales up top, and we go to products and services, we're going to say that these are our items. They could be service items like our guitar lessons, or they could be actually inventory items like the ELP. We're going to have rental equipment, renting music equipment as our service item now, which we could set up here as well as a new service item so that then it will pop up automatically, or we can find it when we create a sales receipt or invoice to bill the client for the rental equipment that we're going to be using. We're going to do that at the same point this time, however, and just create a sales receipt and create an account to record this to, as well as the item that we're going to record this with as we create the sales receipt. So the scenario is that we have somebody who is renting our equipment, and we're going to collect the money at the same point in time as we provide the service, and therefore create a sales receipt. As we create the sales receipt, however, we're going to have to set up this new thing that we haven't done before. That's going to be renting the equipment, meaning we need a new account income account to record the equipment rental, and we need a new service item. So we'll do that at the same time. We're going to say the plus item up top, click this little plus. We got customers on the left side. It's not going to be an invoice. We're going to say it's a sales receipt because we're getting paid at this point in time, and we're really delivering the rental equipment at this point in time as well. So we're just going to put it into the sales receipt, even though they haven't quite used the rental equipment yet, but it's close enough in the point in time. We're going to have that here. So then we're going to say that if we select the drop down, it's going to be for music store stuff. So that's a reoccurring customer. So we're going to say music store stuff. If we tab through this, there's the billing. We're going to say that the date then is going to be the end of the month of February, or 02/28/21, February 28th, 2021. We don't really need an address here because it's not calculating the sales tax, and sales tax typically will need an address in order to help that calculation. This is a service item and therefore shouldn't have any sales tax calculated for it. We're going to say that the type of payment is going to be cash, and it's going to go into undeposited funds. Remember that when we have the sales receipt, that in essence is what it means. It's going to say that cash is going to go up in some way. Cash in this case, the way being undeposited funds, not the checking account, because we're going to group it all together at the end of the month or the end of the day, and then group them in accordance with the grouping we put into our system. And then we're going to have the product or service, and this is where we're going to have the new product. We're going to type in here, rent music equipment. Now this is a new product or service. If we were to select the drop down, we're not going to see that product or service, as if we select this drop down, we see all this other stuff, meaning guitars and our rental equipment and our other sales type items, service items, such as guitar lessons. But this is a new one. We don't have that there. So we're going to set it up now. We're going to set this up. And it's not going to be an inventory item. It's going to be a service type item. It's going to be the rental service. So we're not actually providing inventory and therefore don't have to deal with cost of goods sold or tracking that inventory. So that's nice. And we're going to say, there's that. There's the name. We're going to just scroll through this. It's going to be sales information. I'll put the same thing. We're going to say that the price, and the price may vary based on the type of rental equipment we have, and we might want to try to standardize that. We might want to say, hey, here's our package deal, which is what we're going to kind of say here. If you rent, this equipment all in one group for one kind of show or whatever, then it'll be a package deal. Or we might want to go through and break it out and say, well, here's how much it is for renting just this amp versus this guitar for so much time period and whatnot. So we can see how to go through this. We're just going to say it's 4,500 here. We could also leave it blank and try to decide that as we create the sales receipt on a step-by-step basis, as we go from deal to deal. If the deals will vary from time to time based on the type of negotiation we have. And then we're going to say it's not going to be taxable, so I'm going to uncheck that. And that's going to be it. So we'll save and close this. And it'll populate for us. So there's the sales receipt. And there's one thing that I don't think we did quite correctly, and that is that I think it's going to the wrong sales account. It's going to the sales account that is for the sale of equipment, and we'd like to set up that new sales account. So I'm going to say this is not quite right. I don't really want to record this yet. I'm going to go ahead and close this. I can't go back into it now. I can't go to that service item because I already saved it. But we could still edit it. So I'm going to go ahead and close this item here without saving it. And I'm going to go back and re-input that information. We're going to go to the sales. We're going to go to products and services and see if that product has now appeared now. So we're in sales on the left, products and services. We're going to scroll down and we're looking for this item that we have set up, which is the rent of the music equipment. Here it is right there, rent of the music equipment. And what I want to know specifically is, did I put that into the correct sales account? So I'm going to click and edit this. And if we scroll back down, you'll see the income account it's going to is sales. What we really want to set up is a new account. We'd like to put it into the a new account called rent music equipment or something like that. So something like this is what we would like it to be. We're going to see if it lets us set that up. So I'm going to tab through this and see if it lets it set it up. And I'm going to say save and it's saying it won't let me add that account. So we're not allowed here to add this account in the setup process. So what we're going to do then is add this account to the chart of accounts, and then we'll go back here and make this change. So I'm going to close this back out. We're going to go to the accounting on the left side. And what we're going to do is add a new account. We're going to select a new account up top. And we're going to call that account the category will be an income type of account. So it's not a bank account, it's going to be an income type of account. And we're going to say that the detail type is going to be a service income type of account. And it's not going to be just service or income. We want to make it specific to break out this type of income, this type of service, which is going to be the rental of the music equipment. Not going to have any subcategory. And then we're just going to save that item. So now if we scroll back down to our income accounts, scrolling down, we have the rent music equipment, the sales, and the sales of product income, and then the service fee income. So those are going to be the items we have. Now I'm going to go back and see if we can make that change to the item list, because they wouldn't let us add this account as we create the item. So we're going to go back to sales up top. We're going to go to the product list, and we're going to go back down and find this product that we set up, which was rent music equipment. So we're going to scroll back down, rent music equipment, and then I'm going to edit that item and scroll back down, and it's got going to sales right now. This is the income account. Now it wouldn't let us change that before to make a new income account, but now that another income account is set up, we should hopefully be able to select that income account. So we've got the sales of the shipping, and right above it we have the rent music equipment. So now we're able to select that item. We're going to say rent music equipment, save and close that, and then we're going to go back to the creation of the sales receipt. So I'm going to select the plus item. We're going to go to the customers, and we're going to create the sales receipt. And I'm just going to enter the same data we had before, get back to the same process. And we've just populated the same data. So music store stuff, here's the date, 2/28. Cash is going to be the form of payment, undeposited funds already populated. And then we have, once again, rent music equipment. Same item here. We've just adjusted that now so that the item will record now to the proper income account. So if we click off of it, then it'll calculate this out. Note there's no sales tax here. So what's going to happen when we record this then? We are going to be saying it's a sales receipt. Therefore, we're getting some form of payment. We're getting cash. It's not going into the checking account, however. It's going into the undeposited funds. That will increase. Then the other side of it is going to be some type of revenue account. And that's what we changed. We changed it to the rent music equipment type revenue account. And that's driven by, of course, this service item. So that's kind of what the new thing was here. We created a new service item that's going to a new income account. And this 4,500 then will appear on the profit and loss in the new income account, driven by the item here that we have set up. So let's save this and go take a look at that. So we're going to save this. We're going to close this. Then we're going to go to the reports on the left side. And we're going to go to the balance sheet. We'll change the dates from 02/01/21 to 02/28/21 and run that report. Scrolling down, then we're going to look for the undeposited fund. It didn't go into the checking account even though we already got paid. We put it into undeposited funds. So here's the 4,500. If we select that item in undeposited funds and scroll down, there it is, music store stuff, sales receipt. The other account, the split account, will be rent music equipment, an income statement account. We select that 4,500, then we see the sales receipt. Now let's take a look at the other side, the new account we set up. It's going to be exciting. We'll close that out. We're going to go to the reports on the left side, and we're going to select the profit and loss, going into the profit and loss statement. Changing the dates to the month of February, which is 02/01/21 to 02/28/21. So that's February 1st, 2021 to February 28th, 2021, and run that report. So here is our report, and now we have another income account. So we've got three types of income: the rent music, the sales, and the service fee. Now note, you might be saying, well, the rent music might not be what we do most of the time, and you might not like the order of these three accounts here. You might say, hey, I'd rather have one of these other ones on top or whatever. But note, you can't really do that if it's within the same income account type, because within here, it is then ordered by alphabetical order. So it's first in ordered by the format of the income statement, which is income, cost of goods sold, then expenses. And then within here, it's in order by the name of the account. Now, we could change that by assigning account numbers possibly, but that can kind of complicate things. So just be aware of that. Here's our new account though. It's in the rent income, and it's in the income section, therefore increasing income and therefore increasing the net income as well. If we select that rent music equipment, then we see our sales receipt here. If we select that sales receipt item, the split go on the other side, go into undeposited funds, by the way. And if we select that 4,500, then we see our sales receipt.